Good day, students. I will be doing question 2, which is a question in chapter 13, and this question will be on the allocation of joint cost, and this will be chapter 13 of your textbook. Then it says that X Ltd is a company that produces chemicals for the cleaning industry. One of its processes manufactures joint product, which is joint product Y and joint product Z, and a byproduct, which is byproduct X. So now the minute you are given a byproduct, then it should come into your mind that there is no allocation of joint cost to the byproduct. So now our joint cost will not be allocated to byproduct X because product X was accidentally manufactured. It is not the intention of the company to produce or manufacture byproduct or product X. So now the byproduct X will not be allocated in terms of the joint cost because it's an incidental product. Then they further say that the company uses the net realizable value method of its joint product to allocate joint production costs. So now that means the company uses net realizable value method to allocate its joint cost, and this joint cost will be allocated to product Y and also to product Z, as I mentioned below, that we don't allocate joint cost to a byproduct because it was not the intention of the company to manufacture a byproduct. So now you cannot incur cost for something that you did not intend to manufacture. Cost will only be allocated to products that the company intended to manufacture, which in this case will be product Y and product Z. And then it further say that when we allocate the joint cost, we must use the net realizable value that I have noted. And it says the company produce or the byproduct is valued for inventory purposes at its market value less disposable cost or less disposal cost. So now that means the value of the inventory of the byproduct will be allocated using the or after we have or deducting the disposal value. Is the market value deducting the disposal value? That means if there are selling costs to sell a byproduct, that must be taken into account when we are calculating the value of the inventory of the byproduct. And it says, and this value less is disposal cost. So now that means we say our market value or the sales value of the byproduct minus the disposal cost. And this value is used, take note of that. They say this value is used to reduce. This value is used to reduce the joint production cost of 2,015,000. So now that means the revenue that will be generated from the sale of the byproduct will be used to reduce the production cost, which is the joint production cost. As they said, is the joint production cost. Meaning when we sell the byproduct, we receive the revenue. That revenue must be used to reduce the joint cost before the joint costs are allocated to product Y and product Z. We first have to reduce them by the sales of the byproduct. Then further say that this takes place upon sale of the byproduct. So now that means the number of units that we sell times by the selling price per unit, which will give us the sales revenue of the byproduct. We have to take that and we reduce the total of the joint cost of 2,015,000 rands. Only for the byproduct that has been sold, not the one that were manufactured. Then further say that inventories are valued according to FIFO method of inventory valuation, and say that information regarding the company's August 2016 operations are presented to us below. So now here we are presented with the information gathered for the month of August in the year 2016. And we are given the three products: product Y, product Z, and product X. And remember, this is a byproduct. And we know that a byproduct will not be allocated joint cost, but the revenue generated from the sale of this byproduct will be used to reduce our joint cost of 2,015,000 rands. Then after it says finished goods inventory on the 1st of August. Remember, we are given this information for the month of August. So now that means this will be opening inventory at the beginning of the month of August. Finished inventory on the 1st of August in the year 2016. We had 30,000 units, 100,000 units, and 40,000 units of inventory that were at the beginning of the month of August. And in August, we are told that we sold 1,340,000 units of product Y and 760,000 units of product Z and 240 units of product X, which is a byproduct. Remember, the revenue from the sale of these units will be used to reduce our joint cost of 2,015,000 rands. Then we are given the number of units that were manufactured or that were produced, which is August production. And in the case of product Y, we produced 1.6 million, and in the case of product Z, we produced 800,000, and in the case of the byproduct X, we produced only 200 units in the month of August. Then we are further given the further processing cost in total, which is further processing cost, just in abbreviation. Then further processing cost is 1,400,000 rands, and remember, this is in rands. And we are given further processing cost of 1,520,000 rands. And there is no further processing cost for the byproduct X because we don't further produce a byproduct which was accidentally manufactured. So now immediately when we find a byproduct, we sell it. We don't further manufacture, or this company does not further manufacture a byproduct. Then after we have the final, take note, they say final sales value per liter. This is the sale at the end or after further processing the product. So now we are given the selling price per liter, which is the selling price after the two products were further processed. And the selling price, it is 10 rand and 14 rand for product Y and for product Z. And we are given the sales value per liter at split off. That means immediately when we split these two products, product Y and product Z, then we immediately found that there is a byproduct X, and that byproduct X will definitely have a selling price at split off, because they say at split off, because there is no need for a byproduct, there is no need for it to be further processed. That is why now immediately when product Y and Z was split off, then after we got to the selling price of the byproduct as 2.40 rand. And furthermore, there is a disposal cost per liter. That means for us to sell 1 liter of byproduct X, we have to incur the disposal cost or the selling cost of 40 cents. So now that means the profit per unit of the byproduct will be 2 rand. Profit per unit of the byproduct will be 2 rand. Profit per unit, which is per liter, because we are dealing with liters. Profit per liter of the byproduct will be 2 rand, and we know that the selling price is 2.40 rand, and the cost to sell 1 liter of the byproduct is 40 cents. Therefore, now the profit per liter of the byproduct will be 2 rand. Remember, we are doing this because we were instructed even before that we must reduce our byproduct profit by the amount of the disposal. They said here this value less its disposal cost, where they said its market value less its disposal production cost, its disposal cost, and this value is less its disposal cost. So now that is where they told us that the disposal cost must be used to reduce the sales value of the byproduct. So now that means our byproduct profit per liter will be 2 rand. Therefore, now we already know that there were 240,000 units that were sold. So now if we say 2 rand times by 240,000 units of the byproduct that were sold, that will give us revenue from the sales of the byproduct. It will be 2 rand times by 240,000. This will give us 480,000 rands. 480,000 rands. This will be revenue from the sale of the byproduct. This will be revenue from the sales of the byproduct. So now this is the amount that will be used to reduce our joint cost, and it will be used to reduce our joint cost of 2,015,000 rands. So now that means we have to calculate our adjusted joint cost. We have to calculate our adjusted joint cost. We have to calculate our adjusted joint cost. Adjusted joint cost. And our adjusted joint cost will be the total of the 2,015,000 rands minus the revenue generated from the sales of the byproduct, which is 480,000. Therefore, now that will give us the amount of the joint cost that will be allocated after the adjustments have been taken into account, which is the revenue generated from the sale of the byproduct. 2,015,000 rands minus 480,000 rands. Then this will give us 1,535,000 rands. 1,535,000 rands. So now that means when we allocate our joint cost, we have to allocate the adjusted joint cost. That means after we have deducted the revenue generated from the sales of the byproduct, because we were instructed to do so. So now we have read all the information and we have analyzed all the information so far. And from here now we can go straight to the requirements of question 1, and we see what then are we required to do. It says calculate the byproduct income. We have already calculated that the byproduct income will be 480,000 rands, but we can just do that for formality. So number A, we have the byproduct income, which is byproduct income for byproduct X, and our byproduct income will be the selling price of 2 rand 40 cents minus 40 cents first, and this will give us 2 rand, and we multiply 2 rand by 240,000 units, and this will give us the same 480,000 rands. So now this is the income from the sales of the byproduct income or product X income. So now this was the first requirement for us to calculate the byproduct income, and we have calculated the byproduct income as 480,000 rands, as I have reflected to you that this is the byproduct income. Then now the next question, which is question number B, says that calculate the adjusted joint cost, and take note, it says calculate the adjusted joint cost for allocation for August 2016, which is only 1 marks, and we have already calculated the amount of the adjusted joint cost. Here is our adjusted joint cost, and our adjusted joint cost is 1,535,000 rands. But let us just do it in the formal way. Adjusted joint cost. Our adjusted joint cost, it will be joint cost that we have, joint cost minus byproduct income, minus byproduct income, minus byproduct income, and our joint cost is 2,015,000 rands, and our byproduct income is 480,000 rands. Therefore, now that will give us the adjusted joint cost of 1,335,000 rands. 1,535,000 rands. 1,535,000 rands. So now that will be the second requirement that we have answered to calculate adjusted joint cost. So now that means when we allocate joint cost, we'll only allocate this amount of the joint cost, because we first have to take into account the revenue generated from the sale of the byproduct, because we're instructed that before we allocate our joint cost, we must take the revenue from the sales of the byproduct and we reduce that to our joint cost. Then we'll allocate joint cost to product X and product Z, product Y and product Z. Then now we go to the third requirement, which is requirement number C. And requirement number C requires us that we must calculate the allocation of joint cost for August 2016 for product Y and product Z only. Why are they saying Y and Z? Because product X is a byproduct. So now product X is a byproduct, therefore now we are not allowed to allocate joint cost into a byproduct. We only were instructed to take the revenue received from the sales of the byproduct and we reduce our joint cost by that, and we did that exactly as they instructed us. So now we have to allocate our joint cost to the two main products, which is product Y and product Z, and they say we must use a table format. That means when we answer, we must answer in the table format. So now let us draw a table to allocate our joint cost, and we know that we have two products, which is product Y and product Z. So now we start with the products that we have, and we have product Y and product Z. Then we need to know their units. Units that were produced. Take note of that. We are focusing on the units produced. And units produced, which is production. Here is production. We take 1,600,000 rands. And take note that, guys, we don't take the number of units that were sold, because in the net realizable value method, we take the hypothetical market value or the hypothetical sales value. That means the amount of sales based on the number of units that were manufactured, assuming that all that was produced was all sold. So now we take that into account, only the units that were produced, not the one that were sold. Then after, we have to multiply that by the selling price at the end of further processing the product. So now the units that were produced, it is 1,600,000 for product Y, and we have 800,000 units for product Y, which is August production, the number of units that were manufactured, not the number of units that were sold. Then it will be 800,000 units that were manufactured for product Z. Then after, we have to multiply this by selling price. And our selling price is the selling price at the end, or the final selling price in simple terms, final selling price. And the final selling price was already given to us. And here they said final sales value per liter. So now, even if there was selling price at split off, when we use a net realizable value method to allocate our joint cost, we must take the final selling price. That means the selling price after the product was further processed. So now our final selling price was 10 Rand and 14 Rand respectively, and that was per liter. Therefore now we say 10 Rand and we say 14 Rand, and these are per liters. Then after now we have to multiply the two, and after we multiply the two, then this will give us the total of the hypothetical market value or the sales value. The sales value or the market value. Then our market value will be 1,600,000 units times by 10, and this will give us 16 million rands. This will give us 16 million rands. This will give us 16 million rands. Then after we say 800,000 units that were manufactured, we multiply this by 14, and this will give us 11,200,000 rands. 11,200,000 rands. And this is our hypothetical sales value, or this is our market sales. So now this is our market sales. Market sales value. At least there is enough space. Then now after that we have to get to our further processing cost. Remember, net realizable value is the market sales value minus further processing cost. So now we need to deduct our further processing cost. Then we say minus further processing cost. We minus our further processing cost, and I think we were given further processing cost for both of the products, and it was 1,400,000 rands and 1,520,000 rands, and these were the further processing cost for product Y and product Z. It is 1,400,000 rands and 1,520,000 rands, which is the further processing cost. That means the cost to further manufacture product Y and product Z. Remember, a byproduct is normally not further processed. Then after now, when we have these two, we can just put the brackets there so that you know that we have to subtract our further processing cost, but the negative sign is not important. Please don't bother yourself about that. It's normally kept as positive as long as you know that it has to be negative. Then this will give us net realizable value. And this is the amount that will be used to allocate our joint cost, because we are required to use net realizable value method to allocate our joint cost. Then we'll have 16 million minus 1,400,000, and this will give us 14,600,000 rands. This will give us 14,600,000 rands. Then after we say 11,200,000 rands, we subtract 1,520,000 rands, and this will give us 9,680,000 rands. 9,680,000 rands. So now we have reached to the net realizable value, because net realizable value, it is the sales value or the market value of sales, which is here the market value of sales, and it was based on the units that were produced. Units that were produced, or let me say produced units. That was based on the units produced, not on the units that were sold. Then that gave us the hypothetical sales value or market value of sales. Then after we subtracted our further processing cost, and that gave us net realizable value. Therefore now we have to use these figures, which is 14,600,000 and 9,680,000, to allocate our adjusted joint cost. Don't forget to allocate our adjusted joint cost. So now in this case, we first have to calculate the total of our net realizable value, which is 9,680,000 plus 14,600,000 rands, and this will give us the total of 24,280,000. 24,280,000. So now that will be the total of the net realizable value, which will be used as a base to allocate our adjusted joint cost. So now we have to allocate our joint cost. Due to space, I could have had another column at the end, but I will just create this column here at the bottom. Therefore, now the last column will be the joint cost. The last column will be the joint cost allocation, which is for product Y and for product Z. For product Y and for product Z, then we have our joint cost. Remember, this was supposed to be on the last column, but due to the limitation to space, therefore now I will just draw this in here. So now we are allocating our joint cost now using the net realizable value amount or figures or method. So now what do? We say the allocation of the adjusted joint cost. Remember, we are focusing on the adjusted joint cost. These are the joint costs that were adjusted. Adjusted joint cost. So now we say for product Y, it will be equal to the amount of the net realizable value, which is 14,600,000 rands. 14,600,000 rands. And we divide this by the total of the net realizable value, 24,280,000 rands. 24,280,000 rands. And we multiply this by the total of the adjusted joint cost, which is 1,535,000 rands. We multiply by that amount to allocate using net realizable value method. 1,535,000 rands. So now we check how much will be the amount of our joint cost for the first product. The amount of our joint cost for the first product, it will be 14,600,000. We divide this by 24,280,000. Then after we multiply that by 1,535,000. 1,535,000. Then that gives us 92,3023. Therefore now this is the amount that will be recorded, and it is 92,023. Then we go and we allocate this amount. $92,303. Then we have allocated our joint cost for the first product, which is product Y. Then after we allocate our joint cost for the second product, and it will be the same method, where now we say for product Z, it will be the amount of the net realizable value, which is 9,680,000. 9,680,000 rands. And we divide this by the total of the net realizable value of 24,280,000 rands. And we multiply once again by the adjusted joint cost of 1,535,000. 1,535,000 rands. Then this will give us the joint cost. Remember, this is the 24,280,000 that we divide by. Therefore, now we check our calculator once again. 9,680,000. We divide this by 24,280,000. Then after we multiply that by 1,535,000. and this will give us 611,977. Therefore, now this will be the amount of the joint cost that will be allocated to product Z. 611,977. And if you add these two amounts, they should give you the same total of 1,535,000 rands. They should give you the same total of 1,535,000 rands. Let us just confirm that. Let us just confirm that. It will be plus 97 plus 92 3023, and it gave us exactly 1,535,000 rands. And this is exactly the amount that we are allocating. Then everything is exactly correct with the allocation. So now this is exactly what was required of us to allocate our joint cost, which is this amount and this amount. And we have allocated our joint cost to the two main products, which is product Y and product Z. And now with that, let us check the second requirement in terms of what must then be done in the next stage. So now we have done number C, then we'll be going straight to number D, and we check what number D has installed for us. And the next requirement will be requirement number D. I hope the space will allow us. Then now number D required us to calculate. Number D required us to calculate the unit cost per product and the value of the closing inventory, that is full 7 marks. So we first need the cost per unit, which is production cost per unit. Then after we take that, we multiply that by the closing inventory. So now let us first calculate the unit cost, then the closing inventory. Then after we go to the unit cost, then after we apply that. So we are looking for the closing inventory for all the 3 products. We are looking for the closing inventory for all the 3 products, and this is number D that we are doing. Because of space, let us start on the new page. Number D, we start with the closing inventory. Closing inventory calculation. That means how do we calculate the closing inventory? Then our closing inventory calculation, we need to know that we have 3 products: product Y, product Z, and product X. And we start with the opening units that were there. Then after we have to add our production. Then after we have to minus our sales. Then this will give us closing inventory. Closing inventory, which is the same as the opening units or opening inventory. So now in this case, we have to go and start to check if how many units were the opening for product Y, Z, and for product X. It was 30,000, 100,000, and 40,000. 30,000, 100,000, and 40,000. 30,000 units, 100,000 units, and 40,000 units. So now these are the units that were there in the beginning of the period for all the 3 products. Then now we need to add the production, and production was 1,600,000 units, and it was 800,000 if I'm correct, my memory still serves me. Yes, it was 1,600,000, 800,000 units, and 200,000 units for product X. Then we have 200,000 units for product X. 40,000 just to be in line. Then after we have to minus the units that were sold so that we get to know how many units would have been left by the end of the period, which is our closing inventory. How many units would have been left, which will be our closing inventory. So now our sales for the month of August for product Y, we had sold 1 million August sales. The company sold 1,340,000, 760,000, and 240,000. 1,340,000, 1,340,000. The second one is 760,000. The last one, which is a byproduct, is 240,000 units. So now with this being said, that means we can go to the next stage where we get to know then how much was the inventory that would have been left by the end of this period. So now that will mean we have to say 30,000 opening of Y plus production of 1,600,000 minus sales of 1,340,000, and this will give us 290,000. This will give us 290,000 units. Then let us just repeat that 30,000 to confirm plus 1,600,000 minus the sales of 1,340,000. This gives us 290,000 of the closing inventory. Then after we say 100,000 of product Z plus 800,000 minus 760,000, and this gives us 140,000 units that were left by the end of the period. Then after a byproduct of X 40,000 units opening plus 200 units of production minus 240,000, that means there will be nothing left at the end of the period of byproduct X. Let us confirm if that is true. 40 opening production, there we do a production is 200,000, therefore 200,000 plus opening is 240. They sold all of them. That means there was no need for us to be calculating the closing of byproduct X. Then after we have to say times by product cost per unit. Times by product cost per unit. But we don't know how much the product cost per unit is per yet. Then after we have calculated that, we'll multiply with it there. Remember, we are required to calculate product cost. So now, and then after calculate the value of the closing inventory, then we need to calculate our product cost. Calculate our product cost per unit. And our product cost per unit, it has to be for both products, which is product Y and product Z. And we know that our product cost is made of the joint cost per unit. The cost per unit is made of the joint cost, and we know that our joint costs were allocated already, but our joint costs were given in total. We do have our joint cost, but this is the total joint cost and this is the total joint cost. So now if we need to know how much is the joint cost per unit, we need to divide our total joint cost by the number of units that were manufactured. Because this is the joint cost of 923,023 in order to manufacture the total of 1.6 thousand units. And this is the joint cost to produce 800,000 units. But we need to know the joint cost for 1 unit. So now if we need to know that, it means we have to divide our total joint cost by the number of units that were manufactured. So now our joint cost per unit, it has to be divided by 1,600,000 rands and divide by 800,000 rands, which is the units that were produced units 1.6 million and 800,000 units. Remember, it comes from the information provided to us. They told us how many units were produced. They told us how many units were produced. Let me just go there. The units that they gave us as the units produced, it is given as August production. I just want to remove this so that we are clean. We have August production. There it was 1.6 million. That means units produced. This is units produced, which is August production. August production is the same as units produced. So now we also have for Z 800,000 units that were produced in the month of August. So now we'll be using that to get to our joint cost per unit. That is why now when it comes to the joint cost per unit, we will say divide by 1.6 million units and 800,000 units. Then we'll say 923,023 divided by 1.6 million, and this will give us 0 rands 58 cents. That means joint cost per unit was 58 cents per liter of product Y. And for product Z, it will be joint cost in total 611,977 divided by 800,000 units, which is liters that were manufactured, and this will give us 0.76. That means jointly it cost the company 76 cents per liter of product Z. So now with that, we can go and correct or record this as 0.58 cents and 0.76 cents. 0.58 and 0.76. So now these are the joint cost for the two products, which is product Y and Z. Then now we need to know further processing cost per unit. Further processing cost per liter, because the unit is a liter. So now in this case, we ask ourselves, what is our further processing cost? We do know our further processing cost, but they are given in total. There is the total further processing cost. Further processing cost total, we need it per unit. So now that means we have to say 1,400,000 divided by the number of units that were manufactured, which is 1,600,000, and also divide by the number of units that were manufactured, which is 800,000 units. Therefore, now this will give us our further processing cost per liter of product Y and product Z. And this will give us the total of the unit cost after we've added the joint cost plus the further processing cost. So now let me go again to the calculation of the further processing cost per unit. Further processing cost per unit. So now we are calculating further processing cost per unit. Please don't use abbreviation in the exam. Write further processing cost as a full. So now this will be, or write it as a full word, not abbreviation. Then it will be 1,400,000 divided by 1,600,000 units. 1,600,000 units, and this will give us our further processing cost as an amount of 1,400,000 divided by 1,600,000, and this gives us 0.88 cents. Then after we calculate our further processing cost for product Z, And we know that our further processing cost for product Z, it is an amount of 1,520,000. Remember, this was the further processing cost. That is what we are doing. Further processing cost, we are looking for it per unit. It is 1,520,000 rands, and we divide this by the number of units that were manufactured or that were produced, and this will give us further processing cost per unit. That means it will be 1,520,000 divided by 800,000, and this will give us 1.90 cents. Then now we go and we record this in what is required of us to do. Then we record for Y, which is 0.88 cents, and for Z is 1.90 cents. These are the further processing cost for product Y and for product Z. For product Y and for product Z. Then this will give us product cost per unit. This will give us product cost per unit. This will give us product cost per unit. And our product cost per unit will be 190 plus 0.76, and it will give us 2.66 cents. 0.58 plus 0.88, and this will give us 1.46 cents. So now we can be able to say 1.46 cents times by 2.66 cents. Then this will be value of closing inventory. This will be the value of closing units. Value of the closing units will be times by that. Then after it will be 1.46 cents times by 290,000 units, and this will give us 423,400. And for the second one, it will be 140,000 units times this by 2.66 cents, and this will give us 372,400, and this will be the value of the closing inventory that will be recorded in the statement of financial position under current assets as inventory of product Y and inventory of product Z. So now this is the 7 mark that was very crucial, very important, and worth of you to understand also this part of the topic of joint and buy product. Then now we have done requirement number D, and the next stage is to do the next requirement. And the next requirement is requirement number E. And the requirement number E requires us that the company has an opportunity, take note, it has an opportunity to sell product Z at split off for 10 rand. So now if they were to sell product Z without further processing the product, it will be sold at 10 rand per liter. And they say prepare an analysis to show whether Y should be sold at split off or further processed. So now here there is a mistake because they gave us the joint cost, or they gave us the split off selling price for product Z, but they say show whether product Y, so this must be Z because we are doing Z, not Y. I will decide to change this because they are giving us this one. So now we are focusing at product Z, not product Y. We cannot be given the selling price that split off of product Z and they say we must decide either Y should be sold as split off point or further processed. So now this is for product Z. Then after now we first have to check how much is the selling price of product Z after the product has been further processed. And if we look at the selling price, which is the final selling price, if we look at the final selling price of product Z, here is product Z, and here is the final selling price. That means selling price after the product was further processed. Here we see that is 14 rand. And if they sell it at split off, it will be sold at 10 rand. But if they sell after it was further processed, it will be 14 rand. So now obviously there is an increase in the profit by 4 rand. So now that is something that we need to take into consideration. However, we also had further processing cost of product Z. And we did calculate our further processing cost per unit, and our further processing cost per unit of product Z amounted to 2 rand 66 cents. So now we have to determine if, taking into account the further processing cost of product Z and also taking into account the increase in profit, if this product is sold after further processing it, will the company still makes a profit, yes or no? Then if the company will still make a profit, therefore now this product must be further processed. So now let us look at the incremental revenue. That means the increase in the revenue. This is E that we are doing. Then we are looking at the increase in revenue. And we have seen that our revenue has increased. Then we say increase in revenue. And we know that our revenue will increase to 14 rand from 10 rand. Therefore now it means the revenue of product Z will be increasing by 4 rand. Then there is also further cost. There is further processing cost. And further processing cost, I think I explained it differently. Our further processing cost, it is further processing cost, there it is 1 rand 90 cents, not 266, because 266 is the total cost. So the further processing cost for product Z is 1 rand 90. That is the further processing cost of 190, not the 266 that I've explained previously. That was just by error of not intentional error. So that was just a mistake. Then after now we continue with that, we say our further processing cost. Our further processing cost for product Z, it will be 1 rand 90 cents. That is the further processing cost. So now cost obviously will always reduce the revenue. Then we determine if now is the company going to continue making a profit on the sale of this product or not. 1 minus 1.94 minus 1.90, this gives us 2 rand 10 cents. So now this will be profit. This will be profit per unit. So now if this will be profit per unit, therefore now it means the company should further process product Z. Why? Because it will make a profit of 2 rand 10 cents. And if you want to manufacture, if you want to multiply by the units sold, you can do that and you say units sold and the units of product, the units of product Z that were sold. Here is the August sales. Here is the sales for August, and we have 760,000 units that were sold. Then if you want, you can say times by 760,000 to get to the total profit that the company will generate if this product is further sold. So now this will be total profit. Total profit. And the total profit will be 2 rand 10 cents times by 760,000 units. And this will give us a total of 1,596,000. That means this is the total profit the company will generate if they sell product Z after it has been further manufactured. However, this is normally not required, but just for you to get from a bigger perspective. This is per unit profit, this is the total profit. So now we have done number F. Then after number F, now let us check number E, let us check the next requirement. If what then are we required to do again in this question? And the next requirement is to split your joint cost between joint product using your physical units method, and they say round off amounts to the nearest tens. So now in this case we are allocating our adjusted, don't forget, split off joint cost. I think they're supposed to say split off adjusted. Split off adjusted joint cost between joint products using your physical units. Otherwise, if they say split joint cost, maybe they might mean that split the ones that were before the adjustment. So now, of which we know that there was a profit generated from the sale of the byproduct X, and that profit, if you remember, it was 480,000 or revenue or income from the sale of the byproduct. And we know that we were instructed that the profit generated from the sales of the byproduct must be used to reduce our joint cost. And said this value is used to reduce the joint production cost. Which value are they talking about? The revenue generated from the sales of the byproduct. Where it says the byproduct is valued for inventory purpose at sales market value less disposal cost, and this value less disposal cost, and this value is used to reduce the joint cost. So now in that sentence you can see that it is very clear that the revenue generated from the sale of the byproduct must be used to reduce our joint cost. This is the sentence that I'm talking about. This is the sentence that told us that revenue from the sale of the byproduct must be used to reduce our joint cost of 2,015,000 rands. So now because of that, that will mean that also under number E, they're supposed to have clearly specified that we have to split our adjusted, in this line, adjusted joint cost between the two products using the physical units method. And this is the very easy method to allocate joint cost. We just use the number of units that were manufactured. And here we have the number of units that were manufactured, and we can use them just to allocate our joint cost. And they did not say you must use a table format. They just say split the joint cost or split the adjusted joint cost. So I will be splitting the adjusted joint cost. Please bear with me, although they did not specify. So now we are splitting our joint cost between the two products. Then we start with the products, which is product Y and product Z. Then we say how many units were manufactured, units produced. Then we say units produced. The units that were produced, it will be 1,600,000. And here we had 800,000 units that were produced. Then after we say now we can use these units to allocate our joint cost. Remember, physical units method, it means you use the number of units that were manufactured to allocate your joint cost. That's what it simply means. Therefore now we'll just allocate our joint cost using the physical units. Then we say joint cost allocated. Or you can add here on top and you say adjusted joint cost allocated, so that someone will know that you are working with the adjusted joint cost, whoever is doing the marking, because joint cost had to be adjusted before they are allocated to the two main product Y and Z. Then after now we continue with the allocation. First, we have to calculate the total units because we are allocating using the physical units that were manufactured, not the ones that were sold. Therefore, now we have to say 1,600,000 plus 800,000, and this will give us 2,400,000. This gives us 2,400,000 units. Then now when we allocate our joint cost, we say for product Y, it will be how many units? 1.6 million units that were manufactured, divide by the total units of 2,400,000, and we multiply this by the joint cost, and our joint cost is 1,335,000. If I'm still correct, yes, 1,535,000 rands. Then this will give us the amount of the joint cost to be allocated to product Y is 1,600,000. 1,600,000 units divided by the total units of 2,400,000, and we multiply this by 1,535,000, and this will give us 1023,333. So now this will be 10,023,333, which is the joint cost to be allocated to product Y. 10,023,333 with 4 threes. Then after we allocate our joint cost for product Z, which will be equal to the total units of product Z that were produced, and that is 800,000. Then we say 800,000 rands. We divide this by 2,400,000, and we multiply this by the joint cost that we adjusted to 1,535,000. Then after this will give us the joint cost allocated for product Z, 800,000 divided by 2,400,000 units. We times this by 1,535,000, and this will give us 5,116,666. 665, 11, and we have 4, 6. Then after that will be the allocation of the joint cost using the physical method. 5W1 and 666,000. Then now this will be the total of the joint cost that would have been allocated to product Y and Z. Then we just have to add the two, 1023 plus 5W1, and this gives us 5,334,999. That is because of the rounding off. Otherwise, it will round off to the whole number of, or round it off to the thousands of 1,535,000. That will be up to 535,000 because that is what we were required to allocate. The total of 5 million. So now that will be the requirement number F that we are required to do, which was 1 before the last requirement. The next requirement number G, which is the last one, says explain why the physical units method gives a different joint cost as not net realizable value method. Why are these two different? It's obvious because another one is using the number of units, another one is using the net realizable value, and the net figures and the physical figures were different. If you look at joint cost for product Y, allocated, it is 1023, and for product Z it is 5116666. But if we look at the joint costs that were allocated for product Y, when we use net, it was 923,023 and 611,977. And the reason why these are different is because the net figures, which is the net realizable value to allocate joint cost for product Y and for product Z, it is different from the number of the units that are used to allocate joint cost used in the physical method. So the difference is because of the methods are using different figures, which is the number of units, another one is using the net, and the net is different from the number of the units that were used to allocate the joint cost. With that being said, guys, thank you.